morning, and you're watching the opening bell. I'm Santosh Nair. Well, SGX Nifty futures are indicating a bullish start for Indian equities this morning. The focus largely is expected to be on banking stocks, on the banking sector in general. Quite a few names reported their third quarter earnings over the weekend, notable among them being ICICI Bank, Kotak Bank, RBL Bank, Yes Bank and IDFC First Bank. And in cues from the global markets, US markets rallied Friday on strong earnings from Google, and at this point Asian markets are trading firm. The big concern mainly for the market is that foreign institutional investors continue to be net sellers. They were net sellers yet again on Friday. They sold a little over 2,000 crore worth of shares. And today the key resistance for Nifty could be in the range between 18,125 to 18,150. On the downside, the index has been showing fairly strong support around 17,870 to 17,900. In cues from the F&O market, Hindustan Aeronautics, Dabur, Manappuram and India Mart saw short covering of positions, whereas Atul, Oberoi, Realty, Havels and PVR saw build up of short positions. Overall, this is a truncated trading week. The markets will be closed on Thursday on account of the Republic Day. So, we also have the monthly expiry of options coming up, and because of that we could see some bit of volatility during the week. And with that, let us move on to the key newsmakers this morning. And in newsmakers this morning we have largely the results candidates, beginning with Kotak Bank. The company reported its third quarter numbers over Saturday. Broadly, the key takeaways from the earnings are that overall net interest income rose very sharply, and also credit costs saw a steep decrease. So, that clearly helped improve the operating margins of the company. In other newsmakers of the day, we have Yes Bank. The sale of net non-performing assets largely aided in improving the asset quality sequentially. Slippages were up very sharply to about 79% to 1,607 crore versus 896 crore during the same quarter last year. The net interest margin saw a sharp decline to about 2.5%. Compared to 2.6% sequentially, whereas PAT came in at a 7-quarter low. The return ratios are among the lowest in private sector banks, with return on assets at about 0.1% and return on equity at 0.6%. Kotak Bank, as discussed, the third quarter net profit jumped sharply on strong net interest margin expansion and also lower credit cost. Loan growth was quite strong, led by buoyancy in credit and ramp up in unsecured loans. Overall asset quality stayed robust. The only chink was the performance of its subsidiaries. The performance was a bit weak according to Jefferies, which has also pointed out that clarity on succession will be key to the re-rating. Ultratech reported its third quarter EBITDA, which was largely in line with estimates. The results were largely mixed, although the outlook for the fourth quarter and beyond will be the key to watch. According to CLSA, the volume growth was encouraging. However, realizations were flat. That was a bit of a disappointment, and the increase in profitability was mainly driven by benefits of operating leverage on higher volume. In the major brokerage picks this morning, Reliance Industries, which reported its third quarter numbers on Friday, JP Morgan has rated the stock as an overweight with a target price of 3,015. According to JP Morgan, the operating profit and net profit were driven, the beat in both these key metrics were driven by a sharp jump in the oils to chemical business. JP Morgan sees energy as being the key earnings driver for the company in 2023. Also, the oil to chemicals and exploration and production should improve further, as the spreads have been quite steady. Besides, the other trigger will be the reopening of China. A quick check on the markets before we continue with the stocks in focus. The Nifty has opened on a firm note. It's up by close to about 51 points. The sensex is up by 204 points in early trade. Market breadth fairly strong. 1,600 stocks up at this point, and little over 300 stocks are down. Mid-cap stocks are under pressure in early trade this morning. They're flattish. They were in the negative just a short while back. Nifty Bank is up very sharply. That's the big story of the day. The index is up by about 312 points or close to 0.7%. And with that, let's move on to the stocks in focus. Brokerage picks. According to JP Morgan, the retail performance of Reliance Industries was relatively strong, and at the same time the non-geo digital business also showed a pretty strong growth during the quarter gone by. And with that, let's take a look at the stocks on our radar this morning. ICICI Bank, the net interest margin has risen to an all-time high of 4.65%, whereas the net interest income growth was the best in 7 to 8 years. Operating profit growth was the highest in 15 quarters, whereas gross NPA and net NPA has been the lowest in 32 quarters. Also, the cost to income ratio, which is a measure of the efficiency, operating efficiency of the bank, that has also come in quite good at a 10-quarter high. There have been some chinks also at the same time. The loan growth, the bank has lost a bit of market share, and also the deposit growth is also showing some signs of slowdown. The stock had seen a strong performance between July and early December, but then since then has been struggling in a narrow range. JSW Steel is the other stock on our watch list. The operating profit was on expected lines, and according to CLSA, margins may recover in the coming quarters. The fourth quarter numbers are also expected to be strong. That's because domestic steel prices have been fairly firm, and also raw material costs have been coming off slightly. But at the same time, there are causes for concern as well. Rising net debt is one of the major cause for concern, and also JSW Steel has seen an increase in its capacity. Well, that's a good thing and will drive volume growth, but at the same time it will also increase the company's dependence on low margin exports, according to CLSA, which also feels that valuations are expensive at 8.2 times FY24 EV to EBITDA. SBI Life is the last stock on our watch list. Brokerage commentary on the stock has been largely positive after its third quarter earnings. The stock has risen close to about 5% over the last 1 month, has been among the better performers in the life insurance space. CLSA, Morgan Stanley and JP Morgan are among the brokerages which are bullish on the stock. CLSA in fact has raised its price target for the stock to 1700, and also Morgan Stanley has a price target of 1700, and lastly JP Morgan has a price target of 1630 for the stock. The key highlight during the quarter was that a steady margin profile of its overall portfolio. Quarter on quarter, the margin has moderated, margin of its value of new business has moderated slightly. That is due to an increase in the proportion of unit linked investment plans in its portfolio. However, JP Morgan has said that this one-off, that is more of a one-off, and the moderation in quarterly margins is not really a cause of concern, given that the overall the fundamentals of SBI Life are quite solid. Well, with that, it's a wrap on this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 p.m. today.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.